many great things going on in the world and the economy. Obviously, it's being hidden in the narrative, and obviously the reality of really elevated inflation. Markets that are down 18% in equities, down pretty close to 18% in bonds, the appreciation of the dollar. So there's a whole reset in the marketplace. And the reality, the U.S. is feeling much less pain than other parts of the world because of the dollar appreciation and other issues. But I actually believe inflation will be abating very rapidly.
Will evade rapidly.
Yeah, I mean, is it going to go back down to 2%, which is their objective? That's going to be hard. And that's going to be the fundamental issue. Where is an acceptable level of inflation? I mean, in my 40-something years of being in markets, you would have dreamed for 3 or 4% inflation. So we set this target now of 2%, which can be debated why 2, and I've had conversations on that. My biggest worry is not that we're not going to see a falling of inflation back to 3 or 4%. My biggest worry is the world is losing hope. We have seen a collapse in birth rates and demographics. We're actually going to enter a period of more what I would call malaise. We are all seeing the transformation of China going from what I would have called a very economic-minded economy to a more ideological economy. We're seeing the attendant effects on that, and we're seeing a Chinese economy slowing down to a 3. We have the European economy that has really fundamentally changed right now related to the Russian gas and the cost of energy and the fiscal support by governments. And so I believe after we get out of this real spike in inflation, we're going to be waking up to a world that's going to be a 2-ish, 3% world with maybe 3 or 4% inflation. And I think that's going to be the fundamental issue that we're going to be facing. And because of the situation that we saw just 6-8 weeks ago in the UK, there is a limit on how much fiscal stimulus governments can rationally do without having the marketplace rebel, and that's what happened in the UK. So after we get out of this burst of inflation, it is my fear that we are not going to have the ability for any fiscal stimulus for any time soon. Deficits do matter. And at the same time, the central banks are going to take years in which they're going to have to unwind all their quantitative easing, all their bond purchases that they did over the last 10 years and aggressively in the last few years. They're not going to be as fully equipped to re-stimulate the economy. So we believe we're going to have rates fundamentally higher, maybe where they are today. They're not going to go down. At the same time, we're just not going to have an economy that is based on real growth that we are accustomed to. For long-term investors, this is a great paradigm because...
But if the other side of it is some kind of malaise...
Yeah, but Andrew, if you look at what it took to... Over 50% of our assets are retirement assets, and all I do is focus on how do we get to a long-term outcome, and all my letters are based on that long-term ideal. It is actually easier to meet your long-term liability, which everybody assumes about a 7 or 8% return over 20, 30 years. You're going to have a nice pool of money. It is actually safer to invest to get that return today because you have 2 years trading at a 4 1/4. You have 10-year credit you could buy, at a 5-6% return. I actually believe we're going to go from this hyper interest in growth stocks. We're going to have this hyper interest in earning coupon, hyper interest in investing. Secretary Yellen talked about the IRA, which we are very bullish on and what that impact will do. Those types of subsidies that are coming from the government to invest in decarbonization, it's going to produce 12, 13, 14% returns very easily. We've done investments like that already. And so I think it is actually going to be easier to meet your investment targets today than it was a year ago. To meet your investment targets a couple of years ago, you needed to invest heavily in private equity. You had a short liquidity to get to the return. And now you're able to more safely invest in other things that providing you a coupon to get to your return. So despite all the doom and gloom, there is more opportunities to invest in the markets today than it was a year ago. minding the stores. The question is, you know, we're going to have to wait and see and how this all plays out. I mean, right now we can make all the judgment calls that it looks like there was some misbehaviors of major consequences. You know, I assume, if you look at the Sequoias of the world, they've had unbelievable returns over a long period of time. I am sure they did the due diligence. Could they have been misled? Could they have done other things? Could we have been misled in the small little investments we did? Sure, but until we have more facts, I'm not going to speculate. And that worked. It probably is not going to work in the future because I don't believe we need another food delivery company. I don't believe we need where all this money was going to go. I actually believe where more and more venture capital money is going to be going and more early investment is going to be fundamentally in decarbonization. It's going to be a different science. It's going to require really underwriting the science behind these entrepreneurs. I'm visiting young entrepreneurs who are trying to do, whether it's sequestration or a better way of improving farming by encoding seeds that already have the ability to create their own fertilizer, to reduce fertilizer. There are some amazing technologies that are being developed today. So I actually believe we're going to be seeing a transformation of where this money is going to go. It's not going to go to all this stuff that maybe provided us good utility to get food quicker or find a taxi sooner. But I actually believe it's going to be much more in hard science, and it's going to require a lot more technical understanding. I actually believe most of the companies are not going to be around. I still believe that. I do believe
because they're now real, they're frauds, they're what?
Well, I mean, think about FTX. I mean, you could look back now. FTX created it. Its failure was it's creating its own token. It was not a DeFi. It wasn't a ledger that was open to the world. It was a closed ledger.
Right.
It was not distributed. So the whole foundation of what crypto is, it's supposed to be a distributed ledger that is across the system. I actually believe this technology is going to be very important. Look at it. We have been part of a huge revolution in investing through ETFs. We believe that ETFs will be changing the whole way we invest. Many people still use it as a means, people are investing it for indexing. No, the majority of people who are putting money in in ETFs are active investors that are buying exposure. The entire bond market is being transformed as we talk right now. I believe the next generation for markets, the next generation for securities will be tokenization of securities. And if we could have that distributed ledger that we know every beneficial owner, every beneficial seller, we all have our code of who's buying, who's selling, instantaneous settlement. And think about it, it changes the whole ecosystem. You don't need trust banks. I think they were. I don't know if there was a real custodian in that closed ledger, but that's a whole other story. You should ask them that question. No, I mean, the transformation, think about it, instantaneous settlement, bonds and stocks. No middlemen. We're going to bring down fees even more dramatically. As for me, I don't have to vote on any shares anymore because the beneficial owner will do all the voting. They'll have